Hey guys, what's up? Hope you guys are having a great day today. My name is Matthew Spositi, and welcome back for another episode of the Weekly Market Analysis. Alright, so we got two different currency pairs we're going to be going over today, and yeah, it should be a pretty good video. I mean, basically guys, each and every, if you're new to these episodes and what I'm doing here, ultimately, I'm on my journey to becoming a consistently profitable trader. And I have a lot of experience in back testing and creating strategies. And what I'm doing here is I'm giving you guys an idea of what it's like to go through the markets each and every day. And I'm giving you guys an idea of how I perform analysis on live data, how I look at the price action, how I look at the candlesticks, how I overall determine what trades I take and what trades I don't. And that's generally the idea. I want to give you guys an idea of what it's really like to have to go through live data, because when you're back testing, you're looking over historical data, right? You're not really looking over live data. And there's a huge difference between trading live data and trading historical data. So I wanted to give you guys that idea. I wanted to come in every single week. I wanted to show you guys how I perform my analysis, how I look at the markets, and ultimately how I determine the trades that I take or don't take. And just to give you guys an idea of what it's really like. So to give you guys a little bit of background, I'm still currently back testing my strategy. I'm not a consistently profitable trader, although I have made money in the markets, specifically the options market. That's actually where I first got started. I got started in the options market, and that's, and I actually did make money. But it was all on an unback-tested strategy. It was loosely based off a strategy that I had developed, and was really just more of a trend continuation strategy, not that different from the one that I'm trading today. However, it was unback tested. It was unverified. I didn't verify the performance before I started risking real money. So I didn't know whether or not this strategy was going to win more than it was going to lose, or whether it was going to lose more than it was going to win. What are the maximum drawdowns? How long could I be losing money? You see, every strategy goes through a maximum drawdown. And we'll talk about this real quick before we hop into the charts. Every single strategy goes through a drawdown. So it's incredibly important for you guys to understand, what your numbers, what your statistics are telling you with regards to your strategy. A drawdown is a significant pullback in terms of the performance of your strategy, where you go from, making $3,600, let's say you started off with a $2,000 account, you're up to 36, and then you draw down to like 3,000 or 2,900, let's say 3,000, right? You draw down to $3,000, you lost $600. Well, that would, and let's say that lasted a good month. So it wasn't just a straight shot down, it was like more of a steady decline. And it lasted for like 3 to 4 months. That would be and let's assume that was the biggest drawdown you got in your strategy, your equity curve, which is the amount of money that you have in your strategy. That would be considered your maximum drawdown, assuming it was the largest one. And then you would do the calculations, and you would determine what percentage was that from the highs of your equity, from the maximum amount of money that you had in there at the time that you drew down, and so on and so forth. Guys, every strategy goes through drawdown. In fact, some strategies perform really well during certain market conditions that are, generally speaking, tied to certain times in the year. Some strategies do very, very well at the beginning of the year and towards the end of the year, but they don't really do well in the middle of the year with regards to, like, say, your summer holiday and things of that nature. Some strategies do very well during the summertime, and they don't do that well during the beginning and the end of the year. So it can kind of depend on your strategy, depends on how it's formulated, how it's structured. But in the end, guys, look, every single strategy has a drawdown. So you need to be very cognizant of that. Because of these drawdowns, this is the main reason that you need to backtest. Because if you don't, you will never know what your maximum drawdown is. You will never, ever know how consistent your strategy is. Maybe your drawdown is less than 6%. Maybe it's like 4% or 5%. Maybe it's 10. You're never really going to know. And this is one of the reasons why I stopped trading options with the unback-tested strategy, was largely because I didn't know whether or not, even though I was making money, I didn't know the actual performance of the strategy. So guys, this is why it's important for you guys to do this. This is why it's important for me to do it. This is which is why I'm doing it. This is why it's important for you to do it as well. Because in the end, if you don't know the performance of your strategy, if you don't know how it performs over a long stretch of time. Right now, I'm in the midst of backtesting a particular currency pair, the Aussie CAD, I believe, literally from 2009 to 2020. That is a lot of data, okay? I don't care who you are. That is a massive amount of data. And yeah, it's taking me a long time. Now, before I was only doing like 100 trades. Now I'm doing a lot more than that. Now I'm going out there and I'm saying, okay, I need more data because only 100 trades, it's like a little over 2 years. And I just don't know if that's enough for me to truly believe in my system. That's the other reason why we backtest. The other reason why we backtest is to build a belief in our own systems. You see, I could give you the most profitable strategy known to man, and you're still going to mess it up. It's not because you're a mess up or because there's something wrong with you. The reason is because you don't have a belief in the system. You see, when we're trading stuff, when we're risking our actual money on a particular investment, we need to believe that it's going to work. Otherwise, we would never engage in it whatsoever. You see, the whole notion of taking emotions out of trading is totally false. You can't take your emotions out of trading. Every single decision that you make in life is because of your emotions. You can't take that out. You can't stop that. Unfortunately, there's nothing you can do about it. You have to have emotions in everything that you do. So the idea is not to take your emotions out of trading so much as your idea is to control the emotions. Well, the one way that we learn to control our emotions in trading is we backtest. We do the necessary work that ultimately is going to give us the ability to perform really, really well. And that's another reason, probably one of the most important reasons as to why we need to backtest, is to build the belief in our system so that when we start risking live money and let's say you start going through a drawdown, like we just talked about, you're going to have to, fall back on your belief in the strategy. And if you don't do this, then you're never going to be profitable. You're never going to be consistently profitable. You have to backtest. You got to test the strategy. Whether you test over live data with forward testing, or which is probably a more accurate depiction of what how your strategy is going to perform, or whether you really are going, or whether you test over historical data, or whether you do both. Maybe you do back testing first and then you do forward testing second. I don't know. It's that's my strategy. My plan is to do back testing first and forward testing second. Actually, what I'm doing on TradingView here, every single week I come in and I show you guys my trades on TradingView. And one of the things that I'm actually doing is I'm not just doing these videos for the heck of it because they're fun and enjoyable, although I do like them. Although the setup for the videos is a pain in the rear end, setting up the lights and the camera and everything, and then trying to time the recording time with the screen recording software. Yeah, it's a pain in the rear end. Content creation is not for the faint of heart, let's say that. But one of the main reasons that I'm doing this is because I'm also performing a strategy that I legitimately have, that I'm backtesting currently, but I'm actually performing it on live data, which we're going to show you in a few minutes here. This is also me doing forward testing. I'm actually keeping track of every single trade that I am taking. It's basically an Excel document that just keeps track of every single trade that I take, on what currency pair, at what time, what date, when I got in, when I got out, all that kind of stuff. And, it's a very, very basic, trading journal. I know a lot of people who have much more complicated trading journals, but guys, life is already complicated and hard enough as it is. You don't need to make it more complicated. Anyways, without further ado, and having said all of that, let's get into the charts. All right, guys. So the two currency pairs that we are going to be testing or showing you guys today is the dollar Swiss and the Aussie yen. All right, let's go ahead and jump into the dollar Swiss. So the dollar Swiss right here, as you can see, I'm zooming in, so you may not actually be able to see the actual structure that allowed this to happen. So let's go ahead and scroll the charts back a bit. Here we are. So if we can go and do this. So what actually happened here was that the market came up here, and this was more of a retracement from a bearish trend here. We actually came up, And then we started to continue the bear's trend. We started trending down, stair stepping down, made a lower, low, lower close, kind of had a little bit of a retracement, made a new lower, low, lower close. Then we had a really big retracement right here. Okay. We kind of consolidated sideways. If you actually want to draw in your trend line, you can see that we actually were making a bit of a wedge pattern. That's what this is called. This is actually called a wedge pattern. We had a bit of a false breakout, and I probably could raise my wedge pattern a little bit here. We had a bit of a false breakout right here, but we're making this wedge pattern right here. And as you can see, eventually the market decides to go ahead and close below. And again, it comes up and then it closes a little bit out of the wedge pattern again. And now we're just kind of consolidating sideways. Because it closed below here, this could be an indication that it could head lower. And that is eventually what it does. See, we have a wedge pattern, then we kind of close below, then we kind of go sideways and consolidate. And then finally we make a lower low, lower close below all of this. Now, this isn't what I need in order to get involved. I want to see it making a lower low, lower close below here. I want to see it violate the structure level. So I continue to wait and wait. There we go. We finally violate this structure level over here by closing below it. And then we have a double bottom, which is a reversal pattern, if you didn't know. They're not always 100% accurate, but you can trade them if you want. They don't appear all the time, so that doesn't give you a lot of trading signals, in my most humble opinion. This is one of the reasons I don't like them that much, but I have tested strategies on them. They're okay. It's not something I prefer to trade. And then, as you can see, we come up here. We go ahead and we touch my entry level. Now, we touch the entry level twice right here. The reason I don't get involved is because, honestly, I don't find this trade up until the September 2nd at like 10 a.m. in the morning. So I could have entered here, but I actually but because I didn't get into the markets, I actually ended up finding it here. So I made this blue line and I put my entry level in and I said, hey, if this comes down a second time, I'm going to go ahead and get involved. And as you can see, that is precisely what happened. The market eventually got me involved right here, which is, again, when you see my short position tool on one candlestick, that implies that is when I got involved. Now, which was on the 1600s, that's 4 p.m. here, and that's when I actually came in. That's when I came in around, before 10 a.m. That said, though, this is the trade that we took. We are currently waiting on to see what happens here. I don't really know how I feel about it. We were kind of up here, and we closed above my entry level, making a kind of, actually, looks like we kind of came up here. If we closed above this little wick, it was only slightly. And now we're kind of heading lower, closing below. So hopefully this is just going to continue to roll over, and it's going to continue to, end up hitting my target and end up making me money. But you never know. We'll just have to wait and see. All right, moving on to the Aussie yen. The Aussie yen is a fairly simple one. You can easily see what happened here. The market has been going up, 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 up. We came down here and the market has just been trending higher and higher and higher. And finally, the market came up here, made a new higher close, retraced, and then made another new higher close, therefore violating the structure level right here. So now that the market went ahead and violated the structure level, now we're kind of retracing. Now I decided to draw my fib retracement tool. I'm going to draw this in real quick from the swing low to the swing high right here. Now that I did this, I got my 618 fib retracement level, and we got entered right around here. Again, I didn't see it when the market found this. I actually came in when the market was at this green candlestick, and that's when I took my trade. So, and that is what I did. Now, is this a major structure level? Well, let's be honest. Scroll back and see. No, the major structure level, okay, is here. This is the major structure level. We came up here, made a new higher close, a new structure high, consolidated sideways, retraced, consolidated again, and then we continued the trend. Because of how large this retracement was, I would consider this to be more of a major structure level than this structure level was right here. Okay, That's how I subjectively view it. This is a minor structure level, but it doesn't mean that it won't work. Now, the odds of it working are not as high as the major structure level down here. Okay, the reason I took this is because if this is a very strong trend, okay, and you never really know until after it's happening, but if this is a strong trend, then what will typically happen, and I'm going to have to zoom out of the charts to show you guys this, so bear with me. What you typically see is if you draw your fib retracement tool from the major structure level, from the swing low to the swing high, what you will see is that in order for the market to get down to the 618 fib retracement level, the 76.69 price level right here, the market's got to move a fair amount of distance. If this is a very strong trend, then odds are the market is only going to move to the 382 fib retracement level and then rally from there. That is a very strong trend in my book. The way that I view the markets, if the market comes up, comes down to a 382, and then rallies, that is a strong trend. Okay? If the market comes down to a 618, it's not a super weak one, but it's also not a strong trend in my book. So the idea here is that if the market comes down to the 382, and it hasn't quite just yet, but it certainly looks like it's going to, then and rallies, that would mean that I would miss out on this trade. So per my trading rules, I am allowed to trade at minor structure levels in order to capture those strong trends and see if I can make money. However, if it's not as strong of a trend, it's going to go down to the 618 fib retracement level and stop me out. So, but them's the breaks, guys. That's just how trading goes. You know, it's all a game of probabilities. You know, nobody really knows 100% what's really going to happen in the markets. It's just a game of probabilities. So keep that in mind, that nobody really knows. Honestly, with the way that this particular trade is behaving, it's looking like it's going to get stopped out. I don't really have a lot of high confidence in this trade because it's already below my entry level, and this is a minor structure level. So there's not a high chance of the market actually respecting it. So that being said, that's my opinion on it. You know, take it for what it's worth. I think it's worth a fair amount. And yeah, that's going to be the end of the charts and everything. Hope you guys enjoyed it. It was great fun for me. I very much enjoyed it. All right. Well, that said, guys, hope you guys enjoyed this video. We're going to go ahead and wrap it up. But hey, if you like the video, you're listening to it on YouTube, you're watching this on YouTube, make sure to hit that like button and subscribe. And also, if you're getting value out of this, then hey, hit that bell in the top right corner so you get notified of any kind of videos that we're pumping out here. You know, I greatly appreciate. I'm trying to grow this message of financial freedom, and ultimately just try to get as many people out there to understand that they're not truly free unless they control the source of their income. Ladies and gentlemen, if you are relying on somebody else, then you don't control the source of your income. You're not financially free, and you need to ultimately take control of your income in order to live a truly free life. It's a very empowering message because in the end, it all comes down to you. It all comes down to you making that decision. Right? That's the truth. The truth is that you have the power to change your destiny. You are the captain of your fate. You are the master of your soul. So guys, that's what's so empowering about this message, is that it takes the focus off of external factors, right? You don't have an external locus of control, which means you're always blaming it on something external that you have no control over. Instead, it focuses it on the internal locus of control, which means that you are focusing on yourself, that you believe that you have the ability to change your life, that yes, there are things that happen to us that we can't control, but ladies and gentlemen, every time those things happen, we can control how we react, and the way that we react will heavily define the outcome. So ladies and gentlemen, keep that in mind, that in order to truthfully be financially free, we need to take control of the source of our income, and it's all reliant on us, on you, on me. We are in charge of our own lives. That said though, guys, look, if you like that message, if you like what I'm doing here, then hey, get out there and share it. Share it with 3 people. I mean, odds are if you like it, someone else is going to like it as well. Someone else that you know. So, share it with 3 people. Someone you know is going to like it, someone you think is going to like it, and someone you're pretty sure is going to hate it. But share it with those 3 people, guys. Get out there, hit that share button on any social media platform you're on. And, hey, if you're on the social media platforms, you're on the Facebook, you're on the Twitters, then hey, make sure to make sure to follow me And yeah, if you do all that, I'd greatly appreciate it. Now, let's go ahead and finish off this episode with our affiliate programs. Guys, if you're interested in Forex trading, then go to Tier 1 Trading. They're absolutely the #1 trading coach platform in my most humble opinion. They are absolutely amazing. They will not turn you down the wrong path. You know, so many companies out there, they come out, I don't know if you guys have known this, but if you paid for trading courses before, then you know that it's true that there's so many companies that will teach you a strategy, and then that's pretty much it. They won't even teach you, risk management or things of that nature. They'll just teach you a strategy and they'll call it good. And it's like they totally say, here, trade the strategy and then good luck. And that's about it. And it's like, what? You didn't give me the skills necessary. You simply taught me a strategy. Guys, Tier 1 Trading doesn't do that. Tier 1 Trading will teach you all kinds of things, from money management to technical analysis. They'll teach you how to reprice charts. They'll teach you how to trade all different kinds of patterns that exist in the markets. They'll teach you they'll not just teach you a strategy, guys. They're going to teach you how to create your own strategy. They're going to teach you how to backtest. They're going to teach you how to forward test. They're going to teach you so much stuff. Advanced pattern recognition. There's all kinds of things that they're going to teach you guys, and it's absolutely amazing. So, hey, if you want to learn how to trade Forex, then get out there, go to Tier 1 Trading. They're absolutely amazing, and they really, really are great. So go check them out. They won't turn you down the wrong path. All right, that said, guys, if you're interested in trading, then you need a trading platform. So go check out TradingView. TradingView is an absolutely amazing trading platform. They really, really are great. They do, guys, it's a very intuitive software and intuitive platform. They are very, very good at what they do. It's easy to use. I use it every single week in my videos. I absolutely love them, so go check them out. It's really not that expensive too. And guys, look, if you guys want to learn a skill and you guys want to, take control of the source of your income and you want to do the information marketing or something like that, or let's assume that you guys want to learn a new skill, but you don't really have a lot of money, go to Skillshare. Guys, Skillshare is an absolutely amazing education platform. They've got thousands of courses on like options trading, Forex trading, stock trading. They've got all kinds of investing courses. They've got courses on filmography, videography, photography, how to fly drones. I mean, almost anything you can think of. I used it personally for email copywriting. I've used it for website design. I've used it for YouTube ads. There's all kinds of stuff that I've used it for. It's a great, great platform. If you're interested in any of that, then go check it out. It's very, very cheap. Normally, they give you like maybe a month, 2-3 months off, if you subscribe for their annual subscription. And in reality, the annual subscription is not that expensive, like maybe $100 for an entire year. It's dirt cheap, guys. And I don't know what deal they got going on over there. But hey, click on the link in the description below and it'll tell you. So that said, though, go check that out if you want to support me. Hey, last but certainly not least, if you really, really like what I'm doing here, go check out my Locals community group. Guys, Locals is an absolutely amazing platform. And guys, it's a great, great platform. I'm trying to build up a following there. We got a few people in there right now, but hey, once you get in there, you're going to see most of the content be me. Start posting stuff. Start, introducing who you are. Start, strike up a conversation. Maybe tell me about what you're trying to do to become financially free, stuff like that. But hey, if you want to gain access to me, this is the best way to do it. It's totally free. Go check it out. Well, guys, hey, that's going to be it for this episode. Hope you guys enjoyed it. If you'll do all of that for me, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day.